Hey there, I wanted to do a quick video in our basic options trading series. Again, this is going to be a limited math video, and I wanted to go over the topic of beta weighted deltas. Now, this will be a method which we could use to quantify the directional risk across our entire portfolio. So in general, we're going to have many positions on, and these positions may move more or less volatile relative to each other. So it would be nice to be able to put them basically under the same umbrella and consider them as a single entity to kind of estimate how our portfolio, how much directional risk our portfolio has. So that being said, let's go to a quick presentation and then we'll move on to the trading platform and let's do it. So what exactly is a beta weighted delta? So in stocks, there's this concept of a beta coefficient. And this beta coefficient allows us to compare two different underlying stocks. Usually one of those stocks is some variation of the S&P 500 index. So here I'm using the SPY, which is the ETF that tracks the S&P 500, and I'm comparing it to the stock EEM. So these blue dots are a couple years worth of data, and I'm calculating the daily percent change in both EEM and SPY and plotting them side by side here. And you can see there's a lot of scatter in these data here, but in general there's, roughly speaking, a linear relationship between the two. So when SPY is down big, like down here, EEM is down big. When there's small changes to the negative side, EEM is down small. When SPY is up a little, EEM is up a little, and so on. So a big move up in SPY corresponds to a big move up in EEM. So the beta coefficient for the stock EEM relative to SPY is simply the slope of this black best fit line here, and it turns out to be 0.96. So there's almost a one-to-one relationship between the two. So if SPY goes up $1 in general, and this is again an average statistical thing, we would expect EEM to move roughly 96 cents. Likewise, if SPY goes down $1, we would expect EEM to drop roughly 96 cents. Again, the relationship is not perfect, but it's just a way of categorizing the movement of one relative to the other. Now, fortunately, we do not have to calculate these by hand. We don't have to work out the linear regression and work out those coefficients. The trading platform can do it for us. So let's switch over to Tasty. So I don't usually have the beta coefficient displayed on my trading platform, but for the sake of the video, I put it over here. So let's be very obvious and go down to, where is SPY? I have a SPY position here. If I go all the way over to my beta column here, this should be 1. That should be obvious. How much does the SPY move? Well, as much as the SPY moves. But for other stocks, you notice that this number is different. Some of them are pretty small, 0.77 for AT&T. The symbol T is AT&T. QQQ, which tracks the NASDAQ 100, is what? That's roughly 1.17. So it moves, the NASDAQ 100 moves more than the S&P 500 in general as a percentage change. Let's go to, I don't know, what would be, NVIDIA. Has been a very popular stock the last few years. Down here, let's go over to beta. This is over 2. So in general, if SPY goes up 1%, we would expect NVIDIA to go up over 2%. And I just realized in the intro I said if SPY went up $1, this would go up. I was talking about EEM. I said if SPY went up $1, EEM would go up 96 cents. I should have been saying percent. So if SPY went up 1%, the EEM would go 0.96%, so slightly less than 1 percentage point. Misspeak on my part. But the beta coefficient is not generally what we want. We want to take the directional risk of each of these underlying stocks and recast them to be in terms of the S&P 500 or the SPY. And on my trading platform, I have set it up so that my beta weighted deltas are here in this column. So you can see some of these I actually have short positions here, like in GM, General Motors. I'm short the equivalent. So here I'm short roughly 100, almost 100 shares of GM stock. But in terms of the S&P 500, in terms of the SPY, it's only 11 shares of SPY short. So you can go scroll through these and see various numbers: 4, 5, -3, minus 0.72. So the sum of these, and it's not displayed on my screen right now because I have it hidden, is the total beta weighted delta of the portfolio, which right now, because we've had a market sell-off this week, is getting close to 200 SPY, 200 shares of SPY. And I would prefer that those be closer to zero or even slightly negative. So as you can see, I'm recording at night. Tomorrow morning, I'm going to be looking to put on positions with a short bias to drop that number down. And hopefully the market will rally tomorrow too, which would also help me. So when I log in the morning, one of the things I do is I sort these. So I can come here and I click on this, and it will tell me from lowest to highest how these beta weighted deltas are situated. So my biggest short position right now in terms of beta weighted deltas is in Google, and I'm short the equivalent of 15 and change shares of SPY. And then we've seen GM, IWM. But right now I don't have a lot of big short positions. Excuse me. I don't have a lot of short positions on because of the market sell-off, but I have more long positions on. So if I scroll down here, you see some of my biggest positions are in SPY itself, where I have 60 some long deltas. Oracle, I have 40 some long deltas. What is this? Meta has had a big sell-off the last few days, 30 long deltas. So I'm going to be looking to make delta adjustments in these positions. So I'm going to be rolling down the naked calls I have, maybe selling call spreads against the existing positions, or looking to put on short delta positions in other underlines. So this is a huge help in portfolio management. So it's really important to manage your delta risk, especially if you trade delta neutral. Like I have, generally have like zero-ish deltas in the aggregate. When the market moves big in one way or the other, so it goes up big, you're going to get more and more short deltas. When it goes down, you're going to get more and more long deltas, and you have to be aware of what the magnitude of that position is, so that you don't get more directional risk than your account size can handle. So that's it, guys. It's a pretty simple concept, very useful. If you could do it on your trading platform, I know you could do it on Tasty Trade. I would configure your system to give you the beta weighted deltas of each of your individual positions and as your portfolio as a whole. So that's it for today. Quick video, pretty simple. Good trading, guys, and see you later.